So, talking about insurance generally, there are two types of insurance: life and non-life insurance. This is also called general insurance. Example, motor insurance will fall under this, health insurance, asset insurance, fidelity guarantee, marine insurance, travel insurance, and so on and so forth. Under life, we have term life insurance and we have whole life insurance. To explain these two, term, from the word term, it means this insurance is for a specific term. So it can be for 10 years, 20 years, 30 years, based on your agreement. So essentially, I can go to an insurance company and say that I want a life insurance policy to cover me for 20 years. So meaning that if anything happens to me within that 20 years, whatever we've agreed on as the sum assured. So in that contract, we have to decide what sum assured is. So I can say that I want, if anything happens to me within the next 20 years, I want you to pay 1 billion to my beneficiary. So they will now work out, they will do the mathematics and tell me how much I'm going to be paying every month or every year or every quarter for me to have access to this 1 billion. So within the year that I've selected, say 20 years that I've selected, if anything happens to me within those 20 years, this 1 billion is paid out to my beneficiary. Of course, they will have done their own checks. So it's not like, you have a terminal illness. You now go and meet insurance company. You know that maybe you are going to be living for another 5 years. You now go and take a term insurance policy for 10 years. No, it means you are being deceitful as well. So they will do all their findings, right? But if nothing happens to me within that period, I get nothing. So a lot of people started raising objection around that. So I'll just give you guys money. I pay money for 20 years, nothing happens to me, and I will get nothing. No, that doesn't make sense to me. So they now introduced another one that is called ROP, Term Life Assurance, which means return of premium. So if you have paid your premium for the 20 years term that you agreed upon and nothing happens to you, then they pay back the premium that you have paid to you under that kind of term life assurance. Whole life, on the other hand, has a savings component, meaning from the word whole, it means for the rest of my life. That's what it means. But the good thing with whole life is it also has a savings component, which is also called cash value. So under this whole life insurance, if anything happens to you, you get money. If nothing happens to you, you will get a portion of that money, which is the cash value. So that's the way life insurance works. To talk about non-life insurance, I've already demonstrated how auto insurance works. There are two types of auto insurance. We have comprehensive and third party. But a lot of Nigerians do third party, which is 15,000 naira premium. You buy a car, you just pay 15,000. But they don't understand that this is very restrictive in nature. The protection is not encompassing like comprehensive. So if you have a third-party insurance, similar example that I used earlier, and your car eats another car, the other car eats a shop, and someone gets killed, within this process, they would pay for the other car, the repairs of the other car, or buy the other car, repair the shop, and pay the person that is the disease, right, that was affected. But your own car, nothing will be done to your car because it's third party. So you are paying insurance for any loss that you cause to a third party. So that's what third party means. It's not an insurance really, right? People just take it because road safety will stop them and harass them. That's why they quickly just get. But if you want to really have insurance as a planning tool, you should consider comprehensive insurance. The other one is health, which is HMO. You're essentially protecting your own health. When you fall sick, you can go to the hospital. So think about you fall sick every time and you have to pay out of pocket, maybe consultation, drugs, and treatment that they give you, 50K per time that you go to the hospital. And you go to the hospital 6 times a year, that's 300K that you're spending on hospital. You could have gotten an HMO policy that you only pay 100,000 naira to cover you for the rest of the year. So that's the way insurance works. It is protection. You do it in advance before the loss occur. Makes sense to you? I will see you in the next video.